Welcome everyone. This is our week ahead webinar for the week July 5th to the 9th. I want to welcome everyone. I'm super excited to be here. My name is Angelo Zitis. I'll be assisting you with this webinar and I'll be happy to take any questions that you have. So let's make a start with an introduction that I've prepared for what we'll be seeing now. The importance of the week ahead report needs not to be explained, as it is essentially a window into what the following days could mean for traders and market participants. This report is not to be used as a manual for trading, but rather a brief review of what has been happening so far, mainly in the FX market, and what the economic events in the following week could mean in terms of importance. For the week ahead, we tend to highlight Australia's RBA cash rate, Germany's ZEF economic sentiment, current conditions, and industrial output, the US ISM non-manufacturing PMI, and the UK GDP data, along with the UK manufacturing output. This report will present a breakdown of some of the most important currencies around the world, looking at them from a technical and economic data perspective. We start first with the dollar. So USD, as we said, one of the most important financial releases is the ISM non-manufacturing PMI. You are currently looking at the USD index. As you can see, the USD index today reached to the R1 92.75. In the past days, we've seen a very strong reaction from the dollar. It was dominant against most of its counterparts. One of the strongest currency pairs that we'll be seeing later was the USDJPY. But for the time being, let's note our first support level, which is down to the 92.05, and even lower we have the S2 91.65. I believe that the R1 is the determinant towards if the currency manages to break above it, then we could be seeing the R2 93.10. And as I said, two support levels are important for me, the S1 and the S2. The S3, I believe, is in an extended selling scenario. Now let's get into what we have about the dollar. So the USD strengthened against a number of its counterparts on Thursday, that was yesterday, but also on today, Friday, the 2nd of July, just before the US employment report was released. By the way, our charts at the moment reflect what happened during the US employment report. So according to the dollar index, the greenback is now trading at levels previously seen in April, which could imply that buying orders are building up gradually for the US dollar. Very important was the fact that the initial jobless claims figure fell to a new pandemic low last week, reaching 364,000, which implies the US labor market is improving despite the good news. Economic recovery in the US is still limited by supply chain disruptions, extended unemployment benefits, which seem to be remaining with us for the next months also. On a positive note, in the past days, the Congressional Budget Office raised its forecasts for economic growth, inflation, and federal budget deficits for 2021, estimating real GDP growth of 7.4% in the fourth quarter of 2021. That's on a yearly basis. Now, in the upcoming week, and starting on the 6th of July, we get the final market services and composite PMI, along with the ISM non-manufacturing PMI, all for June. On the 7th of July, another star for the US dollar could be the FOMC, which will release the minutes from its June 15 to 16, 2021 policy meeting. So it's the FOMC meeting minutes. And finally, on the 8th of July, we get the initial jobless claims weekly figure. Moving now to our next currency, which is the euro. So as we said in our introduction, one of the main events in the next week for the euro is the German ZEF economic sentiment and the ZEF current conditions. Okay, so we are currently looking at the euro USD. This is a daily chart. So just in the previous sessions, we saw a brief reach for the 118.10 level. All right, now please note this level has not been seen since April. So we're currently in a downward trend line, okay? And we're seeing a multi-month low. Another significant level that we might be seeing downside is the S2 117.45, but first we have to break the 118.10, which hasn't been breached, which means that currently traders seem to respect it. To the upside, I would note the 118.80 and higher the 119.20 and even higher the 119.60. Now, this 1960 is the highest price reached in the past weeks. So I would consider it rather important. All the resistance levels for the euro are important. And the current direction is downwards. Moving now to what we have as in terms of economic data. From a technical perspective, all right, the euro continues to be in a weak position against the dollar, but managed to remain slightly stronger than the GBP. So euro GBP, in terms of euro GBP, euro is gaining. In the past days, the eurozone data was mixed, with the harmonized index of consumer prices falling to 1.9 in June from previous 2.0, while the bloc's unemployment rate dropped from 8% to 7.9%, slightly improved. Yet, in a report by the Financial Times, it was noted that in one of the latest surveys of the European Commission, EU businesses recorded the fourth consecutive month of increased selling price expectations, which rose to a record high for retail and industrial businesses. And that's one of the main positive things that we tend to note. Now, in the following week, Euro traders will be expecting the final services and composite PMI readings for June from France and the Eurozone, and they will be coming out on the 5th of July. On the next day, the 6th of July, we get the German industrial orders and the German ZEF economic sentiment and current conditions for July, along with the Eurozone retail sales rate for May. Finally, on the 7th of July, we get the German industrial output figure for May. That's it also for the euro. We move now to the AUD, which has the star of the week, which is the RBA cash rate decision. We'll be talking about that any minute now. So AUD USD, this is the daily chart. As we can see, there was a brief touch to the S1 0.7460. This was reached also yesterday, as you can see. Today it leaned a little bit lower, but the level seems to be respected and in market's focus. So a breach below the S1 could signal a movement towards the S2 0.7370. A rebound for the currency pair could signal an approach to the R1 0.7570 and even higher the R2 0.7645. Moving now to the news that we have for the Australian dollar and all the circumstances that seem to drive it. Now, the AUD lost ground against the US dollar in the past week, but remained rather steady against the euro and the GBP. AUD traders will have a rather small number of economic data in the following week, but of rather substantial importance. On the 5th of July, we get the Australian building approvals and retail sales for May, while on the 6th, we get the RBA cash rate decision for July, which will be accompanied by RBA's Governor Philip Lowe news conference. Now, in the July policy meeting, traders may turn their focus on how the bank will decide to manage its QE program and in what manner. According to Westpac's expectations, the bank will remain committed to its bond buying program, as some satisfaction could be evident by the bank at the moment. However, it is also expected that the central bank could decide to take a more flexible approach to its bond buying program than we have seen in the past. Now, this could kind of disturb what analysts, market participants, traders are expecting. Okay, so they could be changing their approach on a weekly basis, how much they will be spending on bond buying on a weekly basis, or how it will be. So that's something that traders may be interested in. Now, at the moment, overnight interest swaps imply there is a probability of 99.62% for the bank to keep rates on hold at 0.1%. Finally, on the 8th of July, we have another speech by RBA Governor Philip Lowe. So RBA Governor will be speaking twice in the following week. One is immediately after the interest rate decision, and the other one is on the 8th of July. And Philip Lowe will be speaking at the Economic Society of Australia. Now, AUD traders monitoring Chinese economic data. AUD traders tend to follow Chinese economic data because the Australians trade with the Chinese and the Chinese trade with Australians. They help each other out on the trade market. So we also have the Chinese Gaixin Services PMI for June to be released on the 5th of June. Keep that in mind. And the Chinese CPI rates for June coming out on the 9th of July. So it's two rather important, significant data from China coming out that AUD traders and followers could have in mind. Let's move to the next currency, which is GBP, and we are seeing the cable daily chart. So the most important event is the UK manufacturing output. We also get the UK GDP data. In general, we are seeing cable coming downwards. It hasn't really attempted the S1 137, which is good, which means that traders are holding up and the buying orders could be coming in. This could signal a move towards the S1, which is, excuse me for this, it could be the 138.30 level, and even higher, I would say, if it's breached, if the 138.30 is breached, then you could move to the 139.60. Now downwards, as I said, it's important for the pair to be able to breach below the 1.37, and under that, we have also noted the 135.75. Currently, the direction is downwards. Excuse me for these numbers right here. Please focus on these numbers on the chart. So let's get into what is happening in the UK and the economic data. Now, the pound seems to be ending the week lower against the US dollar at the moment. These words are written. All right. So a speech by BOE Governor Andrew Bailey in the past days may have shed some light on the current economic circumstances in the UK. Now, this is very important. According to BOE's governor, the UK economy is only nearby 5% smaller than what it was 18 months ago, while the gap is closing quite rapidly, referring to the pandemic. Bailey also stated that all the indications are that for both demand and supply, the decline will be temporary. All right. On a separate note, today, the FTSE 100 was lifted to a pre-pandemic high level in the latest sessions, showing investors feel more confident to invest in the stock markets at the moment. Some analysts view the UK as a very attractive investment destination at the moment after the adverse circumstances created from the UK's departure from the European Union could be making equities seem cheap. Pound traders will be on the lookout on the 5th of July with the Market Services PMI final reading for June, and on the 6th of July we get the Market Construction PMI for June. On the 7th of July we get the UK Halifax house prices, and on the 9th of July we receive the GDP estimates for May and the very important UK manufacturing output figure for May. That's also for the UK and the GBP. So now we move to JPY. As I said, USDJPY has been one of the strongest currency pairs moving upwards in the past week. So interest and focus is placed on it very evidently. So we saw a brief touch. This is a 4-hour chart, by the way. We saw some sessions testing the R1, which is at 111.65. But this level hasn't been able to be breached, and it's been tested many times. So I would say that it's quite relevant to recent price action, and it's also very much it could prove difficult to breach. On the downside, we have the S1 111.50, and even lower the S2 110.45. Okay, now if the currency pair continues to go upwards and the R1 is breached, I would say that the next level higher is the R2 112.05, and even higher the 112.45. Okay, But in the scenario of an extended selling run, then we could see the S3 also coming into play, which is 109.95. So the current direction is upwards for this currency pair. Sorry. Back to the JPY. Now, the most significant event for the next week is the Japanese Services PMI. We don't have a lot of economic data coming out from Japan. Now, USDJPY has had the strongest performance upwards among the major Forex pairs in the current week. Despite the continuous weakening of the JPY, sentiment among large Japanese manufacturers has risen substantially, reaching levels seen in the final quarter of 2018 as the global economy rebounds from the coronavirus. Let me repeat that. Sentiment among large Japanese manufacturers has risen substantially, reaching levels seen in the final quarter of 2018 as the global economy rebounds from the coronavirus pandemic. The Tankan Big Manufacturing Index, which follows the sector, indicated figures jumped from previous 5 to 14, almost triple, in the second quarter of the current year. This is a rather encouraging message for the large manufacturing sector of Japan. Now, the economy, however, may be facing difficulties in the services sector. Thus, JPY followers can keep an eye out for the Japanese Services PMI for June, which comes out on the 5th of July. Furthermore, the Japanese current account for May will be coming out on the 8th of July. Also on the 8th of July, we have BOJ Governor Fumihiko Kuroda, which will be delivering a brief speech at the outset of the bank's quarterly regional branch managers meeting, which will produce a report analyzing the health of the country's regional economies. And now we move to the Canadian dollar. And this is also the last currency that we'll be seeing. So this is USDCAD. This is the 4-hour chart. Now, as you can see, this is an upward movement for USDCAD. Now, the past weeks have been positive for the USDCAD, even though this currency pair, if you look at it from a more long-term view, yeah, it's going downwards. But the past weeks have indicated some buying momentum is currently in play. So even though USDCAD continues to remain in a downward trend line, in the long term, the past 3 weeks have shown tremendous upward movement for the currency pair, which indicates the greenback could be in for a comeback. Yesterday, the Canadian GBP monthly figure for April indicated the economy remains in negative territory, just at minus 0.3%. However, the figure was much better than expected, possibly keeping market participants satisfied. Canada could be finding it hard dealing with manufacturing sales and retail trade at the moment, as they were both in decline in April. Yet some analysts seem to consider the following months as a chance to improve these sectors as reopening is taking place in many regions of the country. For the CAD followers, the Canadian employment report for June is to be released on the 9th of July, and it stands out and could be very interesting. Now, in terms of what we see from our technical analysis, we consider the R1 124.70 a good test for the bulls. It was tested, but it hasn't been breached yet. The upward momentum here seems to imply that more buying orders are coming in. So if this level is breached, then we could see the R2 125.35 coming into play, and even higher, the 126.25 coming into play. A move lower could send the currency pair down to the S1 123.55, which is our first support. Our second support is the 122.95. Now, these levels have both been tested recently, so they are very relevant. And even lower, we have the S3 122 level. All right. Now, I'm putting down a downward direction, but as I said, if what we've seen in the past weeks continues, then the next week could be upwards. All right. So it really depends what is going to happen in the following week for USDCAD. So I have a final conclusion that I want to talk about before I end this, and we can consider some of the questions. Now, if you have any questions, by the way, make sure you place them in the chat or in the question sector, and I'll be happy to take them to have a conversation with our participants. So as a conclusion, Some other economic data that may be of interest to traders include the Turkish CPI rates for June coming up on the 5th of July, Norway's GDP data for May released on the 7th of July, Czech Republic's retail sales for May coming out on the 8th of July, and finally, Norway's inflation data for June and Turkey's current account for May to be released on the 9th of July. So among the top movers in the past days, all right, I'm saying this because a lot of people, oil, we're talking about oil, crude oil, to be specific. So a lot of attention has been placed on the oil market in the current week, and people and traders could be gravitating towards this instrument because of the OPEC plus meeting. In the past days, we saw WTI reaching $75 per barrel, all right, which has been reached for the first time since 2018. All right, so that's a multi-year high. And you know, when oil prices tend to increase, a lot of people get worried. Economies get worried. People start questioning what is happening. So the OPEC Plus meeting has been a great motivator for traders in the past days as speculation has risen, with the group delaying its decision. All right. So the meeting started yesterday. They didn't finalize, they didn't give a conclusion, and they let the event go on. And this increased speculation and increased bullish positions for oil. Now, the oil market in general is very, very interesting, and I would say that it's very, very important because of different situations happening around the world. Okay, so once again, we have the OPEC Plus group, which are making decisions and they are driving the oil market. We have some companies in the US, some energy companies, some oil companies that do not have the economic power to produce oil to bring prices lower. All right, so basically OPEC is making the decisions, is the boss at the moment. And we also have speculation about Iran rejoining the oil market, and if they come in, the expectation is that they could bring a significant number of barrels into the market, which means that if they increase production, if OPEC decides to finally increase production, then they could be looking at a glut in the mid to short term, let's say in the next 3 months, which could bring prices a lot lower, which may not be favorable for them. So they have to think strategically at the moment, and this does not come easy, especially when you're talking about supporting the planet. Another thing, however, that is very, very important, and we must close by noting, is the dangers that the current outbreak with the Delta variant carries on the financial markets. Now, even though most vaccines seem to protect against the variant, it still remains a great threat to health and economic prosperity. Thus, headlines of worsening or improving circumstances could move the markets accordingly. All right. And that's the end of our webinar. I'm checking now if we have any questions or any ideas coming up by our participants. Yep. All right. So thank you guys for joining our webinar. This webinar will also be available on YouTube, so you'll be able to watch it again. And we'll be preparing more webinars in the following weeks with different subjects. We're considering a number of trending subjects to help as many traders as possible. I would like to thank you for your time and focus, and I hope you have a beautiful weekend, and see you guys soon. Thank you very much.